All right, those are scenes from the FIFA World Cup final yesterday, and it has been an iconic one. Perhaps a perfect World Cup final. It did not look like that for the bulk of the session, bulk of the match, but towards the end, I mean, absolute fireworks, and what more can one ask? So we're going to start today's session on high spirits. SGX down, up, doesn't matter. I mean, spirits are high after that wonderful, wonderful match yesterday. You're with us here on Bazaar Morning Call. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi. Morning.
Hi. Morning. And a loss of words, right? That final. And I was supporting Argentina throughout, and I was so happy with the first 80 minutes, and then suddenly things went topsy-turvy.
Well, it was the
All's
best.
Well that ends well.
You know, it was the best soccer game that I've ever seen, and I've seen quite a few, whether it's the league or whether it's even the World Cup. It was the best. You know, Reema, you must have been supporting Argentina. My heart as well was with Argentina, but the way Mbappe came back,
I
you know,
agree.
to score 4 goals in a final and end on the losing side, well, you got to feel for him. But Messi, he came out, he played his trump card, and he deserved to win. Argentina were the better side, I think, for bulk of the game. So,
I mean,
kudos to them.
Nigel, a complete paisa vasool, right, as they say.
Absolutely.
I mean, cracker, because at one point I was thinking with the twists and turns, I mean, the heart can't take anymore. You know?
Yeah.
Just give both of them the cup and send them home, you know. It was just absolute, that kind of a game. And you're right, I mean, Mbappe showed absolute class, right? Explosive speed, and Messi, of course, performed as well. So, I mean, I don't think one can ask for anything more. And this for a game which for the bulk, as I said, 40, 45 minutes, what more, right?
Yeah, around
Nothing,
70, 72 minutes, it was just one-sided.
This is not a World Cup final, and then it picked up.
It picked up, and to what an extent. And I'm telling you what, we didn't get to see Diego Maradona lift the cup in '86. I mean, we weren't there at that time. But to see Messi do the same, wow, amazing. After 36 years, I was absolutely thrilled. I couldn't sleep for a couple of hours, so I did a lot of work.
Sensational, epic, and what a fairy tale ending for Messi, right? The kind of career that he's had. But he's luckily said that this is not the end in terms of his international career. It may be his last World Cup.
Yes.
But I think the coach said, right, if he wants to play 4 years down, the doors are always going to be open, right? He will be 39 when at the next World Cup, which will be held in Canada and I think Mexico, US, somewhere there.
Just one more word, the goalkeeper, Martinez.
I agree.
Martinez, you know, I've played in the goal for a local team. I've played, you know, close to for Mumbai. The way his positioning told you, I'm ready for this and I'm going to win it for my side. You know, after every penalty, he was pumped, and that's what he did against Netherlands also. He was waiting for it. He said, "This is my time now." And you know, even the penalties that Mbappe took, he went to the right side.
He went to the right. He almost touched it, but it was just.
Although
with
I
that
would say
force,
this,
right?
I mean, I feel bad for the French side only because of that. I mean, to end this kind of a game on a penalty, because in a penalty shootout, anything can happen, right? I mean, it's in that one shot, anything could happen. So, in any case, I mean, you know, maybe they will change rules or whatever, but it was a perfect final. As I said, we're starting on high spirits, but we have to take note of what's happening in the market as well. So let's just quickly run you through what the trade setup is looking like as we start a new week. And we're winding down the year as well, right? I mean, slowly but surely we are, although the market is throwing new things at us. Not completely new, but newer. So the main theme globally remains two. One is disinflation. Inflation is coming off sharply. You can see that in data. But at the same time, interest rates are going up. And you've got potential recession in 2023. That is the second part. Potential recession is that feeling is getting stronger and stronger on various matrices. On Friday, just to kind of hammer in that point, you had the US PMI number, which came through, composite PMI at 44.6 as compared to 46.4 in the month of November. That's, I mean, a comprehensive miss, both on manufacturing and on services. It was a miss. Even then, you had Fed officials three Fed officials, without going into details, all focused their comments. This is during the intraday session on Friday in US, focused their comments around still too high inflation and how things need to be done. You know, more needs to be done. And that's the combination I'm talking about. Inflation is coming off, but you've got, you know, central banks very much focused on taking rates higher from here and then keeping them higher, at least right now. Market action in terms of market interest rates, look at the 2-year, the 5-year, the 10-year, disinflation. 19 basis points on the 2-year. This is week on week, Friday on Friday. 5-year down 16 and the 10-year down about 7 odd basis points or so. So that's the setup in the US. By the way, the S&P, and we can talk more about this later, is also poised very delicately at an important support level, which we'll talk more about. I mean, But let's come to the Nifty here. The Nifty saw follow-through. Thursday saw selling. Friday we saw more follow-through selling on the index. We've closed marginally below the 40-day exponential moving average, a marginal close. So I think we need to watch how the market kind of behaves after the open. SGX, I think, is indicating a slightly higher start. But the level, the level to watch is the November lows, which comes in at about 18,133. It's not very far away, given how the market fell on Friday and Thursday. So 18,133, will we go all the way, or before that, I mean, buying will emerge? One needs to watch out. Bank Nifty also, on Friday, it's been the stronger of the two indices, closed marginally below the 20-day moving average. And to boot, it also had not a rare, but I mean, it's been stronger, as I said. It had a negative weekly close, the Bank Nifty. So for the, if unless and until it keeps its head above the 20-day, it comes up above the 20-day and stays there. On the downside, the move could extend all the way to about 42,383. So this is, some levels to watch out for. Above the 20-day moving average, I mean, the move can extend to about 42,383. The 20-day remains very, very crucial for the Bank Nifty. So we're going to start on a flattish, slightly higher kind of note, and we'll pick up the pieces from there. Rima, hi.
Hi, Nigel. Hi, Prashant. The U.S. markets continue to have a rough session on Friday, so the slide continues. And for the week, the U.S. indices were down 1.6, going up to a 2.7% loss for the NASDAQ, posting their second straight weekly loss since September. For our own markets, in terms of the flows, big selling seen by the FIs. The FIs sold nearly 2,000 crore in the cash market, while the DIs bought about 1,540 crore in the cash market. This, by the way, by the FIs is the largest that we've seen in the month of December so far. Month to date, the FIs have sold nearly 7,500 crores, while the DIs have bought about 10,500 crores. So the DI buying so far, at least, has outweighed the FI selling. But as the year draws to a close, there are fewer and fewer cues that we will be tracking. The RBI MPC minutes will be published on the 21st of December. That's Wednesday. The US Q3 GDP print will be tracked very closely. That's on Thursday. And we've also got home sales. So after the disappointment that we got on retail sales, as well as, the PPI index, the PMI numbers last week, the economic data coming out of the United States will be very crucial this week. Two IPOs open up, KFin Tech, and the other one is Elen Electronics. KFin is a larger one, 1,500 crores is what they're looking to raise, but it's going to be a pure offer for sale. Elen Electronics is looking to raise about 475 crore, of which 300 crores is an offer for sale and 175 crores is going to be the fresh issue. So some primary market action as well to track. Hi.
Well, that's right, Rima. Just a quick recap of Friday's trading session. The call that we made at around 8 a.m. on Friday itself was to be a little bit cautious, and that played out because the rallies got sold into. The Nifty ended virtually at the low point of the day. You pull up the intraday chart out there. And the mid-cap index, well, that got clobbered actually. That was down closer on 1.6% also. It was a big underperformance coming in from the breadth of the market. The saving grace was the Nifty Bank ended closer around the 20 DMA. What are the cues we got then? Well, in terms of, the FIs, well, they unwound some positions. So they unwound both longs as well as shorts. But shorts, they closed out close to around 5,000 odd contracts. They continue to remain net long on the index. But overall, for the market, on the Nifty and the Nifty Bank, there was some unwinding of positions. And that's why we did end lower. On the option side, well, they were pretty much mixed. So let's look at which were the active strikes in Friday's trading session. The 18,400 call, 18,300 call. The total open interest between them is close to 100 crore shares. That's telling you there was writing at those levels. And you plug in the premiums, and that will tell you that the 18,400, 18,450, that becomes the first resistance zone. So keep an eye out on that front. At around the 18,000 put, though, that's opened up in terms of, some kind of cushion. If things go wrong, then there is some put buying that's taken place as well. So what are the levels you're looking at? Well, on the upside, the 20 DMA, that's going to be a firm resistance out there. And my sense is a fresh breakout comes only once we get past that level. Don't chase the opening gap up. That would be a more prudent strategy. Instead, if you get a dip closer to the 50 DMA, well, with a strict stop loss, maybe in fact you could try to, go ahead and buy the Nifty closer to the 50 DMA. For the time being, it's far away from there. On the Nifty Bank, it ended closer around the 20 DMA. Well, the 43,500 call was very active. That's giving you a sense that there was writing out there. It ended closer around the 20 DMA. The Nifty Bank, that's the joker in the pack. It holds the key for today as well. Can it do an Mbappe, and come out there and play a good innings I mean, good game, and in fact, maybe still end on the losing end. That's going to be important. For starters, SGX Nifty suggests a bit of a gap up.
Okay, it's actually a mixed picture coming in from Asia this morning. Hang Seng is higher by about 0.4%. Straits Times is up nearly 1%. But on the flip side, weakness seen in the Japanese as well as the Taiwanese markets. The Japanese markets are down close to about 1%. Taiwanese markets lower by nearly 0.3%. So it's largely mixed across the Asian market screen this morning. Let's get you some equity calls then. Christopher Wood of Jefferies says, last week's FOMC press conference following the widely anticipated 50 basis points rate hike in the Federal Reserve funds rate to 4.25 to 4.5% contained a few bombshells. Though Powell, the former reverse walker, tried to sound hawkish, arguing that it will take substantially more evidence to give confidence that inflation is on a sustained downward path. He says, as for the Fed's latest dot plot, there is no rate cut projected by any Fed governor for 2023. But greed and fear would bet against that.
Well, let's get you some money market views as well. On the rupee, B. Prasanna of ICICI Bank says hawkish guidance by the Fed and the ECB has dampened the risk sentiment and supported dollar in general. Rupee was under pressure from the dollar buying by RBI and offshore hedging flows. Bhaskar says currencies are expected to remain range-bound at the end of this calendar year, and he expects the rupee to trade in a range of between 82.1 to 83.1 range this week.
On bonds, Bhaskar Panda says despite a hawkish FOMC which reiterated higher rates for longer, US yields softened last week owing to lower inflation prints. In India too, domestic inflation eased, but government bonds remain under pressure with continued supply and tighter liquidity conditions playing spoilsport. He expects markets to trade sideways with the 10-year benchmark yield in a range of 7.2 to 7.35%.
Well, we have a lot of stocks-specific action to track for you today, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Yes Bank, L&T, Ashoka Buildcon, Shilpa Medicare, Specialty Restaurants, IGL, Phoenix Mills. They are stocks on the back of positive news flow. However, on the flip side, we have Nifty IT Index, Sun Pharma, and GMM Pfaudler. Well, they could open up in the red.
Okay, Rajat Bhattacharya is joining us. He's senior investment strategist at Standard Chartered. Rajat, good to have you with us here. Thank you very much. Will the market go into a bit of a sideways track for the rest of the year, or do you expect aggressive moves from here? Because we got a glimpse of that last week out of the US. We got some rub-off here in India as well. But do you think this is it, or will we continue to see aggressive action? What's your sense?
Hi, Prashant. Yes, I think that we are going to see a bit more pullback in the markets. And why? Because as you saw last week, the central banks in the US and Europe are both hawkish and more hawkish than the market. They have a reason, and why we say that, because the Fed is telling us very clearly that it wants to induce a recession. If you see their new forecast, what it's projecting is higher unemployment rates, lower growth. It puts growth for next year 0.5, but that's just by the by. If you watch the unemployment levels, that's going to go significantly higher. The projections that they've made suggest that you can only get that high level of unemployment through a recession. So they are trying to induce a recession to cool down the job market, and that they believe will cool down the wage pressures, which is their biggest risk. So given all that, and we've heard from Lagarde as well in Europe, where she was hawkish and she was saying that the market pricing of the terminal rate for ECB is way too low. And we should take her on her word, because again, inflation in Europe, as we know, is still at 10%. That ECB has a singular target, that's a 2% inflation rate, and they're way off from there. I mean, their projections also, if you look through 2023, 2024, they're not going to get back to that 2% level in the next 1 or 2 years. So they need to keep charging on. Given that backdrop, we should see further pullback. We've been saying that for a while now. We have asked, we had actually recommended investors to fade the rally going in November when it was peaking. S&P 500 is making that downtrend channel. It's pulled back from the top of that downtrend channel. Right. It's going to probably test the lower end of that channel.
Rajat, morning. Rima here. I think the last time we chatted, you indicated, which is close to about 3 weeks ago, that it was time to add your exposure to emerging markets, Asia ex-Japan. Could you tell us what is it that you've added to? Does India make it? What is the pecking order?
Yeah, that's a good point. So that's the other side of the story to the story I was painting about US and Europe. So we are bullish within that overall downtrend in global equities. We see we are underweight. We turned underweight on global equities. Within that, we are overweight on Asia ex-Japan. And now within Asia ex-Japan, we are overweight on China. Why we say that? Because China, as we've been highlighting for a while, is way undervalued. It's been beaten down. Its earnings expectations are looking up. If you see the credit stimulus there, it's picking up. We know the COVID story there, and they have been trying to ease that. Obviously, now we're facing the brunt of winter, and we're going to see COVID cases rise, and there's going to be some back and forth in terms of the recession, in terms of how this COVID easing goes through. But the direction is very clear. The direction is of an upturn in China. Given that we are positive on Chinese equities within Asia, India, we are more neutral because India, as we know, that the valuations are high. Now, that doesn't mean that we need to take money out of India. I mean, India is still, the structural story is very much intact. We know that the growth is going to outperform, India's growth is going to outperform the rest of the emerging markets, 7% growth, right? And if there is a recession in the West, oil prices are only going to probably soften from here. That's good news for India. So we're not going to take money off India, but the opportunity really within Asia is in China.
Hi Rajat, morning. So it appears structurally you continue to remain positive on India, though a tactical buy is on China in the near term owing to valuations and at current levels. Well, Rajat, I also wanted to ask you about the Fed. Now, they are talking about not cutting interest rates till 2024. Do you buy that? Or do you believe they will be forced to do it maybe towards the end of 2023?
Yeah, I think the second half, we're going to probably see some rate cuts. So I do agree with the market on the second half, but not so much in the first half. I think the Fed means what it's saying in the first half. It's going to keep raising rates. In fact, we see a Fed terminal rate of as much as 5.25%. I mean, the market has pulled back. It used to be around 5%, right, the terminal rate, but now it has pulled back to around 4.8%. We see that as a temporary phase. It's going to, go back towards that. Fed's going to keep charging along in the first quarter, especially. And then once the recession hits, we're expecting a recession somewhere in the middle of next year. So once the recession hits, job markets start slowing. Inflation will, of course, because of base effects, start slowing before then. It's already started to slow. All of that will come together to help the Fed to then soften back and pare back some of the rate hikes that they've made in the second half of next year.
Okay, Rajat, we'll leave it at that. Thank you very much for joining in. That's the Standard Chart view. On the whole, underweight in global equities. Within that, they like Asia, emerging markets, tactically very bullish on Chinese markets, neutral in India as valuations continue to remain high. But there is no money to take, there is no reason to take money out of India, as India's structural story still remains very intact. Get into a short break. Our list of top 10 stocks is lined up next.
का हर अरमान पूरा करे एक नाम श्री राम बोना उगाना कारोबार चलाना हंसाना मनाना वादे निभाना कोची मोहाली राजौरी वाराणसी मुंबई पन्ना शिमला बड़ौदा श्री राम के साथ आगे बढ़ना श्री राम फाइनेंस लिमिटेड आपकी प्रगति का साथी
Invest once and enjoy guaranteed maturity with life cover with LIC's Dhan Varsha, a single premium plan for your family's security and prosperity.
उत्तरवीर कमाल दिखा अपना, कभी टेबल बन जाता है तो कभी अलमारी।
वीर MDF आम प्लाईवुड से ज्यादा मजबूत, ज्यादा किफायती, दिखे चकाचक, टिके टकाटक।
Get the grip of good health even after 50. Presenting now Star Health Premier Insurance Policy, always at your doorstep.
Life will test you. It will turn your world upside down. Again and again and again. The only way to hit back is to stand up. Stand up every time and say, I'm not done.
Welcome back to Bazaar Morning Call. Hope you're having a good morning. Well, as promised, we have quite a few stocks that we're tracking for you. So let's get straight to them. Our research team is standing by with a complete list of CNBC-TV18's top stocks for the day. Rima, you go first. ID stocks will be reacting to the results from Accenture as well as the commentary.
Okay, so first, Accenture's Q1 numbers were very strong, ahead of street expectations. The revenue growth at 15% was higher than the company's own guided band of 10 to 14%. The company managed to maintain margins as well. So Q1 was very good. That said, despite a strong performance in Q1, the company has maintained the full year guidance. So the FY23 constant currency revenue guidance stays at 8 to 11%. This should also provide some extent of relief because the street was fearing that given the macroeconomic uncertainty, what if Accenture goes ahead and brings down the guidance? We had HCL Tech as well, sounding a bit cautious on growth. Accenture has maintained the growth guidance. Let's tell you some of the key takeaways. Growth is likely to slow down. Look at Accenture's second half of the year implied guidance. It's for a growth of 5.5 to 9.5%. This would compare with a near 25% revenue growth that they saw in the year prior, if you just do a like-to-like comparison. So that's a sharp slowdown. Secondly, the management commentary is also fairly hawkish. They are talking about rising caution among clients with a focus on cost optimization projects. So decision-making has slowed down. Some of the larger deals are harder to come by. There is some caution. So the commentary is a bit worrying. The good part is attrition has seen a sharp decline. From 20% in Q4 FY22, it's come down to 13%, which means the labor side situation is easing, positive for margins of Indian IT companies as well as the attrition. And finally, a negative news for mid-cap IT companies because Accenture's commentary indicated that there is a slowdown in smaller deals. So smaller deals would be typically where mid-cap IT plays, and there they are seeing some extent of a slowdown. So on the whole, not a great read, but not terrible as well because Q1 numbers for Accenture were pretty healthy.
All right. Thanks very much, Rima, for that. Now let's move on to Yes Bank. Abhishek is here with more details. Abhishek, hi, morning.
Morning, Prashant. So, Yes Bank to sell identified stress worth about 48,000 crore to JC Flower ARC. So, this will be in the structure of 15 to 85, that is 15% cash and 85% SR, that is security receipts. Recoveries in FY23 or till 30th November 2022 will be adjusted to the stress assets which are being sold. Talking about stress assets, let's take a look at Yes Bank's different stress assets. Gross NPA at about 27,400 crore, restructured book close to about 6,000 crore, and write-offs over the last 8 to 9 quarters have been more than 25,000 crore. So these are the stress assets which could get sold to the ARC. View is that this will clean up the balance sheet, this will free up the capital, so they will have capital for growth, and stress in the balance sheet will reduce. So positive for them. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, let's hop across to Vivek. He's here to tell us about L&T and Ashoka Buildcon. Morning, Vivek.
Well, good morning. That's right. So L&T, now in line with the company's stated strategy to exit its non-core businesses, and remember they had identified 3 businesses which they wanted to exit. So they've completed one on schedule. So what they've done is they've exited their entire 51% stake in L&T IDPL, which is infrastructure development projects, road typically consisting of road assets. This particular company was a JV between L&T as well as Canadian Pension Fund, and the gross proceeds from this particular deal, to L&T as well as CPPIB would be a little over 2,700 crores. Now, brokerages have reacted. Jefferies is saying that the next important thing to watch out for over the next 12 to 36 months would be the divestment of Nabha Power as well as the Hyderabad Metro assets. Macquarie believes that the next focus will be on support from Hyderabad government for the metro project as well as real estate monetization around the Hyderabad metro project. Coming to Ashoka Buildcon, some positive news flow coming in. Company subsidiaries are looking to sell stake in the Jawara-Nayagaon toll project, and this particular stake sale would be done to NIIF, that is the National Investment and Infrastructure Fund. The gross proceeds from this particular sale would be a little over 690 crore rupees.
Thank you very much for that. Let's get to Sonal. She's going to tell us about IGL and Phoenix Mills. Sonal?
Good morning, Reema. Let me start with Phoenix Mills because they have now bought a land. They have made an acquisition of 7 acres of land parcel in Surat, and the total consideration for this acquisition is 510 crore rupees. Land is acquired via an indirect subsidiary of the company, that is Thoth Mall and Commercial Real Estate, and this subsidiary will actually go ahead and develop a mall, a retail space in the city of Surat, which will have an area or saleable area of 1 million square feet, and retail development will complete by FY27. IGL will be in focus because the company has gone ahead and hiked prices. Now it's pricing in closer to 80 rupees per kg in the Delhi NCR region, and this is the first price hike that the company has taken since the time domestic gas prices were hiked versus the peers which had already taken a price hike. So this is a positive move. The stock should be in the green today.
All right, thanks very much, Sonal, for that. GMM Pfaudler is the next one. The stock saw a large correction on Friday. It did come up from the lows, but what's new? Vahishta is here with that. Vahishta, hi, morning.
Hi, Prashant. Good morning. Well, there's been a block deal in GMM Pfaudler. The promoter company, which is Pfaudler INC, has sold 17.32% equity through bulk deals at 1,700 rupees per share. And the Patel family has entered into an arrangement to purchase 1% equity shares from Pfaudler INC. The Patel family now becomes the single largest promoter shareholder in the company, and as a result of this bulk deal, the shareholding of foreign and domestic institutional investors has increased. The promoter group holding will decline to 30, the total promoter group holding will decline to 38.74% from 56.06%, and Axis Capital has been the sole broker for this deal. Let's look at what has been the shareholding history of Pfaudler INC. In June 2020, it was as high as 50.44%, which had come down to in June 2022 all the way to 32.68%. In September this year, it was at 31.88%, and the balance after the block deal has come in at 14.56%. So going with a red year. Back to you.
Okay, all right. Thanks a lot for that, Vaista. Well, let's wind this down then with Ekta. She's joining to tell us about some more stocks in the news. Ekta?
Thanks for that. Well, I'll start with Sun Pharma, which is in focus. They did release to the exchanges that they've received the warning letter from the US FDA. Now, that will become public in some time, but nonetheless, there could be a sentiment negative for Sun Pharma. Remember that on December 8, 2022, which is just a couple of weeks ago, the US FDA had issued an import alert to the Halol facility. Shilpa Medicare expect that stock to probably be in the green because they've launched a drug used to treat breast cancer as well as colorectal cancer in India, where the dispersible rate of the tablet is much faster than what is available, and the amount 1000 mg is much higher than what is already available in the market. So that should probably be a positive. And specialty restaurants, they're going to be meeting on the 21st of December to consider fundraising.
Thanks a lot for that, Ekta. Well, here's a quick recap of all the top stocks that we just covered for you. Stocks with positive news flow include Yes Bank, L&T, Ashoka Buildcon, Shilpa Medicare, Specialty Restaurants, IGL, and Phoenix Mills. Well, stocks with negative news flow include the IT Index, Sun Pharma, and GMM Pfaudler.
Let's talk about commodities then. Manisha Gupta, our commodities editor, joins in for a roundup of all the action from the commodity market overnight. Manisha?
Thank you for that. I'll start with the crude oil prices, where we saw last week prices gain up by nearly 4%. And this week as well, we've started more than a percentage point on the higher side. On one side, there is the China demand hopes with the expectation that the China economic policy meeting will work on boosting consumption further. It's supporting the prices. The second news comes in from US, which says that they will replenish the emergency reserves and will start with 3 million barrels. Remember, the US Strategic Reserve has released 180 million barrels in this year, and the stocks now stand at 38-year lows. The third point supporting the crude prices today morning is the Keystone pipeline, which is still partially shut, and the market's taking premium from that. The decline, though, has come in for the metal prices. If you look at aluminum, that has seen a decline in Asia right now. Copper prices, after falling 3.5% in the previous week, have continued to decline right now as well. With the major central banks signaling higher interest rates going forward, China COVID cases rising, that seems to be weighing onto the prices.
All right, thanks very much, Manisha, for that. That's commodities in focus. We'll take a quick break here. Prakash Devan will join us for some fundamental stock analysis on the other side. Later, we'll also have Girish Pai, Head Research at Nirmal Bang Institutional Equities, to talk more about the Accenture Q1 impact on Indian IT services companies. Stay tuned.
यूं ही नहीं मैं बन जाता हूं। कुदरत के कोने कोने से खूबियां खोज लाता हूं। गुणवत्ता की गहराइयों का गोताखोर हूं मैं। कुशलता की कार्यशाला में तराशा जाने वाला हीरा हूं मैं। यूं ही नहीं मैं रजनीगंधा बन जाता हूं।
Investing without research is like driving blindfolded. Introducing Motilal Oswal Research 360. 35 years of Motilal Oswal's equity expertise, now in a single app. That too for free. Download now. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Everyone looks at the world today. At Hyundai, we go beyond. With experiences that take us forward. Inspired by our today, we design your tomorrow. Some said electric is the future. We said, why stop there? At Hyundai, we are going beyond mobility, and you are welcome to join us.
Different ages, different stages. Get best protection with Star Women Care Insurance Policy. Always at your doorstep.
Okay, welcome back. 30 minutes to go for the pre-open session at 9 o'clock, and it's indicative of a 40-odd point higher start. Let's welcome in Prakash Devan, who's with us. Prakash, hi, good morning. Good to have you with us here as always. You know, so three areas I want your quick thoughts on. Public sector banks, we saw a 3% cut in the index on Friday. For the week, Friday to Friday, it was still higher. But do you think a top has been made on that for the year? Or you think there is more to go? Resumption of the move, and then two smaller parts of the market which saw very frenzied moves. One is fertilizer, and that too, you know, the Madras fertilizer, FACT, NFL, etc. And sugar made a comeback on Friday. So PSU banks, sugar and fertilizer. Go on.
Good morning, Prashant. So I think, you know, PSU banks is probably taking a pause from what we started middle of the year when we had this June-July correction, and then, you know, the kind of fancy that that started building around banks. It's just started percolating to the PSU banks. It's been a bit too soon. It's now, you know, probably for the banks to catch up in terms of actual earnings growth and you know, a lot of the recovery of provisions that they have written off in the past, which will start coming and aiding the balance sheet. once that is done, you'll probably see a little bit of a re-rating begin again, the next phase. As I keep on explaining, banks, the cycle is very simple. It's growth, hyper-growth, NPA creation, then the cleanup, So we've just got out of the cleanup and we've got into the growth phase. So I think there are more legs to go, but some of the smaller PSU banks definitely are very pricey, very expensive on valuation, because they're yet to actually see benefits come through. So, what's happened is the larger banks, which actually did the real work in terms of cleanups and provision write-backs, they are the ones that are getting mimicked by the smaller banks, and people look at, more of low-price stocks to get into at this point in time. So I think for the year, yes, I agree the top has been made. I mean, there's hardly any time left for the year, another maybe a week and a half or so. But come next year, post-March is when probably you'll see the resumption in the cycle. So you'll probably go through a time correction. On the fertilizer space, my belief is, the prioritizing that the government is doing in terms of gas supplies and the kind of arrangement. And you had a very lovely interaction with the secretary the other day, where he was explaining how, the ties with various nations has been working well for them in making sure that the fertilizer sector doesn't get impacted on any gas supply disruptions. And that is very encouraging, because given food inflation, given the kind of cost, the price escalation in some of the commodities that you otherwise see, it's usually difficult for the sector to absorb this. But this time it has absorbed, it's passed it off to consumers, and we've been seeing a very elevated kind of a trend for most of these prices. In spite of that, there's been agri growth in the recent numbers. So I think fertilizer is here to stay. It's a re-rating after a long time. I think I've not seen this in the last 5-6 years. And what's happening is, once they get into some sort of a scale up, the efficiencies will kick in, the operating leverage will happen. This is exactly what happened to sugar maybe about 2 years back. So that's where the cycle is. So it's definitely very promising. And on the sugar cycle, I think we've discussed this quite often. You will have to stick to the larger names, in my view, because they are the ones who actually benefit more. They're more resilient. In case of any regulatory changes that get made in terms of especially price mechanisms and all, or the quota system for exports, it's going to be the smaller ones that will get impacted much more. So, they don't go with the high beta names, go with the larger names like Balrampur, Dampur, so those will be much more safer. But sugar is definitely in a very sweet spot, literally, figuratively, at this point in time, given the dynamics on pricing and on the ethanol consumption. I mean, every day you've been seeing how the ethanol adoption has been going up, and it's getting much more broad-based. So my sense is sugar companies, good times still ahead.
Prakash, morning. Things have quietened out, right? Even in terms of news flow. I was struggling to ask you some stock which is in the news. But just tell us, any interesting tactical plays, any themes that you've discovered recently?
So, good morning, Rima. So I think, yes, come New Year end, the year end, and, we start kind of pinning a lot of hopes on the New Year, so nothing much really takes off. But, one sector that my sense is, again, which is getting into a little bit of a cyclical mode from, this debate on cyclical versus structural keeps on happening every time a sector revs up. But in this case, it's very sincerely cyclical in terms of the upswing, and that's probably the road sector. Look at the kind of consolidation that's suddenly set up. You have everybody talking about projects that were not doing well, which probably were not designed in the right way from a financial closure perspective. They are the ones who are kind of being bought out by people like ARCs or alternative asset managers. On the other hand, NHI continues to ramp up the new order book for a lot of the newer sectors. And what's going to happen is, once the DFC comes through or gets closer to completion and actual operational listing usage, you will start realizing how significant this can be in terms of making sure that our ambitions to export more, especially engineering goods beyond just services, is going to be dependent on how we manage the logistics element. Now, the logistics cost is something which is a big deterrent for us as a country. While the ports have improved their efficiency or are in the process of doing it, that the consolidation we've seen, it's a road sector that has to kind of jive in. So I think that's going to be a great sector to watch. The number of companies is huge, but you have to be extremely picky, choosy, because some of them have very fractured balance sheets because of the past. So be careful. But there's lots happening there, which I can see in terms of news flow, which is still under the radar of, so it's not making headlines, but it's definitely in the middle pages. And that's where a lot of change will happen, Rima.
Okay, so you see the road sector bubbling. Stay on, Prakash. We want to talk about the technology space. On Friday, Accenture reported the Q1 FY23 numbers. The results were very strong, beat on the top line, but the company has gone ahead and maintained its full-year guidance. The stock was down 6% on Friday, and over the last two trading sessions, Accenture lost close to about 10% of its value. Girish Pai, the head of research at Nirmal Bang Institutional Equities, is now with us on the show. Girish, first, your key takeaways from the Accenture numbers, the commentary, and the read-through for Indian IT.
First of all, thanks for having me on your show. So I think the numbers, the results per se, in my opinion, portend difficult times for the Indian IT service industry going into the next 12 months. So the thing about Accenture is that its year ends in August. So the guidance they're giving for the full year, the second half actually coincides with the first half of FY24. So you're kind of getting a peek into the kind of number, the growth numbers that we could potentially see for the Indian IT service industry. So when you look at that, the numbers don't look too great. So for the full year, if you look at the organic growth guidance that Accenture has given, that's about 7% versus that 21% kind of number that it clocked in FY22. And when you kind of split the first half versus second half, the sense I'm getting is that you're going to see somewhere close to low single digit to mid single digit kind of organic growth for Accenture in the second half, which kind of, as I said, coincides with the first half of the Indian companies. So that does portend difficult times for the Indian industry. That's point number one. Second, what I am a little concerned about is the very strong performance that Accenture has shown on the managed services side. This is the piece of the business where I think Accenture actually competes with the Indian players in a much more meaningful way. And I don't know whether this is the demand situation or that there's a market share shift that's kind of happening in favor of Accenture. So that is, I would probably say, the second concern I have. Third would be about, I would say, the smaller deals. I think you did make a mention of that. What it says, and this is something that was mentioned by even Cognizant about 6 months back, that smaller deals in the pipeline are fewer in number. And if you look back in history, both tier 1 and tier 2 companies have both benefited from smaller deals. For instance, Wipro in FY22, you had a situation where it did not clock too much of TCV, but it showed very strong growth. And one of the reasons why it said it did well was because the strong flow of smaller deals. And tier 2, you had instances of LTI and Mindtree, which didn't see very strong TCV growth. Even they delivered very strong growth because of the smaller deals. So I think that could be a bit of a challenge for tier 2 companies and even for the tier 1 companies. And lastly, while attrition has kind of come off very dramatically, my sense is that the very strong net hiring relative to what it did last quarter does indicate that probably companies have overhired and probably misjudged the extent of demand. And that could mean a challenge in terms of how do you kind of deploy the human capital going forward, which could mean involuntary attrition, some sackings happening in the next 3-4 quarters. So that's broadly the sense I have of the industry.
Hi, Girish. Good morning. Nigel on this side. You know, Girish, I've got that call pretty much right? You've been a little bit cautious on the IT space, and that's played out well. Now, you've given us a few factors as well that are at play. My question to you is, how much more for correction on the tier 1 companies will make you change your stance? Will it be a 15% correction from year on? That will, get you a little bit more constructive.
Yeah, Nigel, my sense is that the street is still not, put in the, even I would say normal bear case situation in their numbers. So when I look at my estimates for FY24, I'm kind of building in low to mid single digit kind of US dollar revenue growth for the tier 1 companies. Whereas I think the street is broadly building in high single digit kind of number. And my sense is that the street is building in a little bit of margin expansion going into FY24, which I think is unlikely because I think there's going to be a little bit of pricing pressure. And also there's going to be on-site salary cost increases that are going to come through, which will mean that margins at best are going to be flat versus FY23. So earnings have to come off. And from a P multiple perspective, as we speak today, the multiples are fairly expensive compared to history. And when I talk of history, I'm talking the pre-pandemic timeframe, where tier 1 stocks are trading between 15 and 20 P kind of multiple on a forward basis. we are probably in that 25, 26 kind of a forward PE multiple at this point in time. And you also need to take into consideration that 15 to 20 PE multiple pre-pandemic phase was when you had a zero interest rate regime globally. I don't know how things are going to pan out on the interest rate side, but fairly unlikely that you'll actually see zero interest rate going into the next 5 years. So I would think that the stocks have to correct anywhere between 20 to 30% from here for them to kind of reach levels, which in my opinion will lead to some meaningful kind of returns kind of coming through for the tier 1 stocks.
Okay, 20 to 30% correction from here on. This is over and above the 25% knock that we've seen in 2022 so far. Girish, you said your estimate is that the tier 1 IT companies will see a low to mid-single digit kind of revenue growth next year, right? FY24?
Right.
So that would be exactly the pre-COVID levels, right? Pre-COVID, FY17 to FY20, IT companies had a revenue growth of 5 to 8%. So the fact that growth is going to go back to pre-COVID levels and the interest rates are a lot higher than what they were pre-COVID, what should the valuations be? Should they be even lower than what we had pre-COVID?
Ideally, they should be, but I don't want to sound too bearish at this point in time. So, yeah, from a growth perspective, just for FY24, my sense is that the growth is going to be a bit compressed because of the bad macro environment we're going to see in both US as well as in Europe. So we're going to see probably a valley kind of a situation develop in terms of growth rates. So FY24 is going to be the lowest part of the valley. And then probably in FY25, we're going to come out of it. Now, how strongly we're going to come out of it is dependent on whether we're going to see inflation come off to like 2% levels and Fed go into a significant monetary stimulus, say 12, 18 months down the road. So that is the call that we'll probably have to kind of wait. So my sense is that FY24 is going to be the low point from a growth perspective, and things should pick up from there in FY25. And my sense is that with this whole digital transformation that's kind of playing out in a compressed form, which is what Accenture keeps talking about, we should see slightly better growth than the 7-8% growth we saw pre-pandemic. Okay. So it should be a little better.
Okay, thank you very much for joining in. That's Girish Pai of Nirmal Bang saying that at least as of now, there is no bottom in sight for the Indian IT companies. They could see a correction of close to about 20 to 30%. And after that, perhaps there is some value. FY24 growth is going to be depressed on account of the adverse macros and the base effect. But FY25 onwards, that long-term digital transformation, the compressed transformation theme is going to play out, and growth is likely to get back to that 7 to 8% levels.
We spoke with Naren, and we should play out that soundbite. Specifically on IT services, he said basically that his point was buy into the recession, for IT services. He said you could buy stocks directly or you could buy an IT fund, but invest systematically, not lump sum. But put some money into an IT fund or whatever IT stocks you like, but do it now, and this would play out, according to him, pretty similar to what banks did, right? When nobody wanted to buy banks, and eventually the cycle turns. So that when it turns very fast. So you want to kind of you want to buy stuff and no one wants to buy it. But that's
that's increasingly a lot of view that I get from investors, right? That we are in the final stages of a bottoming out for Indian IT. It could play out over the next 6 to 9 months, and therefore it makes sense to buy into the weakness. Things may go south, but perhaps in the next 6 to 9 months, the earnings will bottom out and things will start improving. We will see the worst of the earnings as well as valuation derating. So in the final stages of a bottoming out.
But 25-30% could be still is pretty large. The point is, if you do it systematically, as they say, no one rings a bell at the bottom, right? Or at the top. So it's impossible. So you got to be there for the turn whenever that happens. Well, we'll take a quick break here. We'll be joined by Mitesh and Sudarshan for some technical trading ideas. Stay tuned for that. We're back.
देखो 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 नया टीवी देखो got the veggies from Chotu's shop. He gives the right rate.
Yes, Papa.
Decided. 55-inch TV on this wall.
Oh, super. I'll write out the check tomorrow.
No, you don't. I will, with my own money.
Oh, wow. How come?
Look at this advertisement. 30% assured returns on investment. I am also going to invest my money.
So vegetables only from Chotu's shop, but investment advice from anyone? Papa, trusting a stranger's advice is never wise.
But what about the TV?
सोच कर समझ कर इन्वेस्ट कर
Cashless hospitalization is easy. Get details on our network hospitals at www.starhealth.in. Always at your doorstep.
Why did life test me? Why did it try to crush me, shake me, break me? Why me? Because it knew if I could take this test, I could take anything and say, that was easy.
मेरे पिताजी ने ना ये शेयर्स में भी इन्वेस्टमेंट किया।
पीएसएस को फोन लगाओ।
पीएसएस?
ये आपके फिजिकल शेयर्स को डिजिटल करते हैं।
PSS फिजिकल शेयर सॉल्यूशन।
जैसा नाम वैसा काम।
फूल वाला, केटरिंग वाला, बैंड वाला, ये लो भाई।
बैंड बजेगी पापा, अगर गड़बड़ हुई तो गए पैसे।
अरे नहीं रे, बैंक संभाल लेगा।
कैसे?
मैंने पॉजिटिव पे सिस्टम पे रजिस्टर किया है। बैंक को चेक्स और बेनिफिशियरीज की जानकारी दे दी है। बैंक चेक करेगा, जांच करेगा। डिटेल्स मैच नहीं तो क्लियरेंस नहीं।
अच्छा, लाइए मुझे दीजिए। फोटो वाला, लाइट वाला, मंडप वाला।
आरबीआई कहता है
जानकार बनिए, सतर्क रहिए।
बिल्कुल सही कह रहे हैं।
Welcome back. Well, it's a good time to get in our technical experts with news that the SGX Nifty is suggesting a 40-point gap up. Mitesh Thakkar as well as Sudarshan Sukhani are with us. Good morning, gentlemen. Sudarshan, let's come across to you. How would you trade the index? Friday was a bit of a weak session, and even Thursday was one, but today we're likely to see some green. Would you chase the opening or would you stay away?
Good morning, Nigel. The markets have been going through a correction of some kind. Now, at this point of time, they have come to 18,300, which is a minor support zone. Now, there are 2 points. First, we have gone through a correction already, so we have some dips behind us. We have reached a support zone. And third, we have the traditional Santa Claus rally in front of us. That usually happens. I cannot say whether it will happen this time or not, but that prospect is there. So for today, I would be a buyer if 18,300 holds, and then look for whatever gains can come in the market. Keep a 100-point stop loss. Wait patiently till the afternoon. If we see 18,300 holding, we'll like to take a long position home also. And the same applies to the Bank Nifty, where 43,000 is the level. If that holds, then buying would be suggested.
Okay, and we have Mitesh also with us. Mitesh, hi, good morning. Sudarshan, hi, good morning. Mitesh, what's your strategy?
Good morning, Prashant. My sense is that the market has kind of turned slightly on the weaker side with a lot of indicators turning mildly negative. So for me, I think I would want to use rallies to create and add on to short positions. I think it will be very difficult for the index to get past levels of around 18,400 to about 18,450 on the upside. Anything close to 18,400 is an area where I would want to go short. So very clearly, I have a slightly negative view. And while 18,300 has been an important support, we closed below that on Friday. That's not a very positive sign. And a small gap up will not change the opinion. So it's a sell and rallies market for me. Would want to sell into call options or even buy put options for the month of January.
Okay, so Sudarshan is saying that buying at 18,300 is a good idea, and Mitesh believes that if we get to 18,400, a short perhaps makes sense. What about individual stocks, Sudarshan? What is it that you would recommend?
Well, we are looking primarily at mid caps. TVS Motors is a buying opportunity. Now, this is a buy on dips opportunity, which means that the momentum so far has not been positive. The idea is that perhaps we might see some change in trend here because small base is being built. So buy with a stop under 1,012. PEL, Piramal Enterprises, is another buy where a reasonably attractive bullish pattern is under development. That's a buy with a stop under 848. That's a stock that has been going up even when the Nifty was going down. Trent is an intraday short. Trent has a rather dismal chart. It fails to cross its previous highs, keeps on making lower lows. So an intraday short with a stop above 1432. And finally, Chambal Fertilizers is a buy. Again, a stock that's going outperforming the Nifty. Buy with a stop under 307.
All right. Thanks for that, Sudarshan. Well, Mitesh, what about you? What are the picks you have for us?
Morning, Nigel. I have a mix of buys and sells. On the buying side is Balrampur Chini with a stop at 387, targets of 405 to about 410 here. Gas Authority or GAIL is a buy with a stop at 95 for targets of 100. And on the selling side is Ashok Leyland. If you get a gap up of around a rupee and a half there, go short with a stop at 144.5, targets of 137 here. Similarly, ABB is a sell as well, around 28.50-55. Sell with a stop about 2,900 for targets of 27.70 to about 27.60.
Gentlemen, thank you very much for joining in. The SGX Nifty is still suggesting a very quiet start, mildly up in the green. It could be a lackluster opening. Things have gone quiet on the domestic as well as the global cues. Get into a break. We'll come back with the pre-opening rate, and we'll also be joined by Probal Sen of ICICI Securities to discuss the windfall gains tax cut on crude oil.